All right, guys, welcome back to another episode of Wisdom and Wealth. I hope you're doing good. I'm excited to bring a topic that we're excited about. I was talking with Chris, our marketing gal, here before a second ago, and we're going to get her on camera, I swear, at some point. But one thing that's very important to us, and especially if you're a faith-based person, or obviously if you just love your family, you are usually philanthropic, but you want to make sure that they're good. And what we want to do in this episode is give some wealth building tips. Basically, the free advice that I give people that don't suit our client profile. And what I mean by that is they don't have our minimum million and to invest with us. And so I titled this episode is Before the Millions, the Money Habits That Build Wealth. And this is what we want to do is basically for anybody who's just starting out, or if you want to teach your kids and you're not sure what to teach them, here's some very practical things that we have to get going with money. So a lot of people don't get involved with their own money until it's too late. And so what I want you to do, I just got some bulleted items that we're going to talk about in this. We want to get involved with our money. We want to hold monthly budget meetings, family or solo. First of the month, this is what my wife and I implemented at first. It's first of the month. I did a spreadsheet. I still remember the first time she's like, we didn't spend 10 grand last month. And I'm like, Mr. Excel doesn't always lie when you add up the numbers, and it was a reality check for us the first time that happened. And so we had to come reconcile that in our own spending. But a lot of things, what we can do basic in that is we're looking for check fraud, spending. We're planning for the month ahead. We're looking if there's any credit card, somebody we need to cancel something or had exaggerant spending or fraudulent charges of some sort. But we're looking for things that are out of character, but getting involved with our own money so we don't ignore money problems or things that lead to surprise problems. And so what happens in that is clarity eliminates fear. And so when we get deep dive and we just jump in with everything we got, even when we don't know, take the step and jumping into your budgets, to your bank accounts, to your credit card statements. And if you got investment accounts, jumping into that. But if you're somebody who's unsure, just get involved somewhere at some point. And because when you start swimming, eventually you start figuring out like, well, I know what that is. And I know what this is. And it just starts becoming clearer at some point. And so clarity comes from action, right? Not from sitting here thinking about it. So want to jump on and jump in our money. And really it starts off with this about your money as a mindset shift. Wealth starts with how you think, okay? And what I'd like you guys to know is that money is not bad. It's not inherently bad. It's a tool. It's neutral. You direct it. It's a tool on how you use it. And so really it's an amplification of people. So if you're awesome or like you're a huge giver and you get more money or fame, you end up being a bigger giver and use that fame as a tool to help people direct towards giving. But if you're a big jerk, and you get a bunch of money, you become a bigger jerk with that money. Or you're a big spender and you get a big inheritance or a lottery winner. This is why you hear lotto winners go broke, is because everybody thinks that they know what to do with that money until they get the money. Well, what happens is the foundations early set the behaviors for later. And posted this morning on your actions today are like credit cards. They show up 30 days later. And very much so, if you get this big pile of money, you're going to blow it if you've been blowing everything else up to that. But if you've been managing it well up to this point, or at least have it proven that you're not able, you don't have to spend it impulsively and be irresponsible, you're going to have it so you can go place it in a little better places and go into investments or something like that. And so this is the mindset shift. And I'll tell you a really great book that I've loved. One of two books that I've read 3 times through. First time I read this book, the second I finished the last page, I flipped it back to the first page to start over. And this book was Poverty, Riches, and Wealth by Chris Volaton. And so the core idea in this is they want you to escape poverty and pursue kingdom level stewardship. But really, it's a mindset towards money and what it means. And a lot of people in our world think money is bad or inherently evil, or, how much is enough for somebody. There shouldn't be billionaires at all. And really, that's not the case at all, because money is attracted to people that are attractive. And so what I mean by that is the people that pursue it and become really good at what they do and understand it and understand the utility of it, utility that it is a tool to be used to fund giving, to fund investing, to fund your craft, to fund your skill, to fund fun or experience life-giving things, that is purely a tool. The people that understand that know that they can use it. And so when they use it and they've applied that like crazy and understood the behaviors of it, they can better apply that decision-making skills to earn more money. And so they understand that, like, man, I know that if I go execute, I'm in a sales, and the better I get at sales, the more sales I make, the more money comes to my household. I know I can create more cash flow that way. And then I can go put it into another investment and create more cash flow potentially. And so it starts with this mindset shift. You got to get away from the victim mindset of like, there's no way somebody else should have that much money. Well, that's just an envy mindset is what that is. You're like, you shouldn't have that much money. Well, who are you to tell somebody else to do with their money? Okay. They're the ones that earned it, or maybe somebody else had to earn it at some point, whether it was an inheritance or a big win or something. And so there was some effort or some blessing that had to come somewhere along the line for them to receive that. And so really the mindset, very much what we take in this podcast is, how'd you do that? How did that happen? Explain to me. It's not computing in my head. I need to understand this a little more and take a little more curiosity to that. And I promise you, you're going to have some explosive revelations in your life that you should put into action right away. Okay. So this is so read that book, Poverty, Riches, and Wealth by Chris Vulaton. Amazing book. Okay. But here's a couple practicals that I want you guys to take away. Number one, I hit on this: building wealth starts with your income. A lot of people think diversification. You hear this concept of, I need 7 streams of income. No, BS. You need one awesome stream of income first before you diversify anything. What do I mean? Create the river, not the stream. Create the river. And you get a lot of these people to get distracted like crazy. And they're like, well, I do this and I do this and I do this and I do this. Well, you really don't do any one thing well. You do a lot of things just okay. And so hyper concentration builds wealth. Diversification protects it and keeps it. Okay. So specialize in a skill. And what I mean by that is go invest in a skill, whether that's investing, or for me, it was financial planning. When I deep dove into my own money to understand what was going on in my investments and in my own money behavior when I was playing ball and after. And so I understood that. And because I understood my own, I could make better decisions on my own with my wife. And then afterwards, when I got into the business, I could start understanding the intricacies within the business. And I started hyper investing into people that were smarter than me. And for a lot of you guys that watch the Botsford podcast, that was her. We hit her bit of encouragement for me the other day was she shared to the group where in, I think it was year 10 or 11, her revenue level was where we hit in year 4. And that's evidence that I took that wisdom and I hyper concentrated it and I specialized that area into one area, and it sped up my learning curve and ultimately my earning curve quite a bit. Okay. And so specialize in a skill. It allows you to charge more and build faster. And so here's an example of a contrast of skills that I want you to take away with this. Taking out the trash is a low skill. That's why we have minimum wage. It takes low skill to be able to grab that bag and take it out to the trash can. Okay. Versus maybe a consulting where I can ask questions and I can fix. Here's an example: is we had somebody who was selling a big asset, came in, was prepared to do that. They hadn't taken the money yet, and we were able to circumvent a little over $1 million in capital gain tax. Well, if you're talking about taking a $10 million asset, and I can take that is supposed to, if I took all the money, it was going to net 7. And I could save myself $1 million, that would be pretty amazing. And I'd be willing to pay a premium to go get that. Why? Because even if I found that and I charged $100,000 into somebody, they're happy to pay that $100,000 to get that net 900 back in their pocket than what they were going to get in the first place. And so this is why I value my CPA. This is why I value my attorneys. This is why I value all my financial investment people around my circle, because they can see things that I can't see potentially. And so I built that hyper skill to find those problems so we don't have those major problems come in. And so if you have a massive estate collapse, well, you're happy to pay somebody handsomely to make sure that collapse doesn't take place, right? And so you can build that up as a hyper skill so you can build your income and then distribute that income to other places. So your number one wealth building tool is your income. Understand that. And so I'd like to make a note, avoid the credit card trap in this. So a lot of people, we are in the highest consumer debt time in our history, our nation's history in the United States. And a lot of people get caught in this. Well, I'll put it on the credit card during this wealth building or during the skill building time, just so I can float it. And I'll say, maybe you can do that a little bit, okay? But don't fall into the trap of the extravagant spending in this, because you're talking about getting charged 15 to 25% on top of your credit cards, depending on your credit score. And once you get in that, it overtakes you if you spend too much time in that category. And so you got to be aggressive to get rid of it. And so don't get caught in that trap. I beg you, don't get caught in that trap. They try to get you out of college and you don't want to do that. So we want to develop building habits. What are some of those habits we can do? We got to read money and mindset books. We got to listen to podcasts and stay around wisdom, people that are good at where we want to be already, not the people that are below that area. I know we want to help those, influence those. Okay, we got to help somebody up, but I want to hang around people that are smarter, richer, and have more than me and have better relationships than me, because I want to be like those people. You got to fill your inputs with smart, positive, forward-thinking stuff, okay? If you want to do it, join in with us, follow the podcast, newsletter, social content, LinkedIn. I share a lot of stuff there. But next step is we want to start investing. And so 3 of the biggest wealth builders or investment categories in our lifetime that we've seen is the stock market, the real estate, and private equity, which is investing in your own business or somebody else's. And I've seen personally big pops in all 3 of these, and it's been really, really powerful, okay? But you don't need to master all of them. You just got to need one to start understanding. And you're not just buying assets. What you're doing is you're buying back your time and freedom in investments. And so I'd tell you, if you're somebody who's under that sub-million, when people come in and they're not qualified to get into this, typically they need some insurance. They need maybe life insurance to cover, because if I'm a young couple that's depending on each other and we buy a house together and now we have a mortgage or something, and one of them passes unexpectedly, that other person has a lot of stress on their plate all of a sudden. So a little bit of life insurance there, maybe some disability, some other coverages that may be in place. A lot of times that's the place for them. After that, simple investment tools that those people can usually get, depending on your income, you start depositing into Roth or contributing to Roth IRAs or other retirement accounts, or you just go into a general investment account, or you start in a 529 or education savings investment account if you got kids and you want to do it. It depends on your priority, but you got to start somewhere with one of those places. And I'll say, at bare minimum, just go open an account and start investing a little bit, just bits here and there, and start getting involved yourself, okay? And so start reading up on the investments within the accounts, and that could be like ETFs, mutual funds, or stocks. A good book to reference here is One Up on Wall Street by Peter Lynch. He started the Magellan Fund at Fidelity back in the day that had just went on this rip-roaring ride of major investment returns and was awesome, and a lot of people made a lot of money off of this. And so go look it up. But one of the best pieces of his story that I really appreciated was he used to walk around in the mall with his family and see what they got excited at what store. And so he'd go to like Bath and Body Works and see how excited his girls would get. And then he would go research Bath and Body Works and see if they were a company worth investing in. And so a lot of the stock market or our investments deals around the things that we deal with every single day. And so, because if you go put in some of those things, it's no guarantee of gain, okay? But some of those natural behaviors lead to profit for companies that lead to stock increase. And so, those are places that you can start checking out right away and just start gaining a little bit of knowledge to start somewhere, okay? So these are some basics that you can get involved in. Here's the final word. Here's what I would share with you is take one step, just one. Small step, big step. What is one step that you could take to just start today? Okay. And I can't give blanket advice because I don't know exactly where you and your family are at right now. But for anybody under our million minimum right there, you got to take one single step. What's most important to you that you want to care for? Okay. And take a step towards that direction. Clarity comes from action, not sitting around and thinking about it. Okay. Don't worry about being perfect in the next step. Just take one action, open an investment account, have a budget conversation, cancel a subscription. Maybe it's too big for you. Okay. Read a book or even shoot us an email. Happy to share, DM me on LinkedIn. Happy to share anything with you to just get started. And ask you a few questions to get that. But you guys are amazing. If you start taking those incremental steps, I promise you on the backside of that compounding return of that action, just like the credit card usage, that 30 days, you're going to start seeing some benefit. Okay. Guys, if you like this, go follow the podcast, go listen to the other episodes. There's a ton of wisdom from everybody that we have on. And go subscribe to our newsletter, all the things. Please go check us out. And if this is good, you like this, share it with somebody else. I'm asking you, do it. Okay. Love you guys. Have a great week and we'll see you soon.